Right, everybody, it is 9 o'clock, so welcome to the Finance and Audit Committee meeting, and we will now just go through the housekeeping. So this meeting is being recorded and will be live streamed on the Council's YouTube channel. So while Palmerston North is at COVID-19 protection framework orange setting, we are asking everybody to scan in with their vaccine passport and follow the public hygiene measures. Just health and safety, just look at the health and safety procedures on the screen. There's no members of the public here, so just everybody make sure that you're aware. I don't need to go through all those. And just make sure, because we've got people online, that they know who's talking. That's all I need to do. And I'm just noting that Councillor Rachel Bowen is on remote today, so she's online, so everybody's aware of that. I think I have covered all those procedures. So we'll now move to the apologies. Are there any apologies? Right, full house. I have no notification of any additional items. Good. Item number 3, declarations of interest. Are there any declarations of interest? No, we'll now move on. Public comment. I'm unaware of any public comment. Right, so we'll now move on to confirmation of the minutes. I'm happy to move the minutes. Do I have a seconder? Thank you, Councillor Hancock. Are there any comments? So we will vote. Just checking, there's nothing on the minutes? No, we'll go to vote. That the minutes be approved. Right, and that is carried unanimously. Right, we will now move on to item number 6, which is on page 17, and we are discussing, just one moment, just go to my page. Additional director for the Palmerston North Airport, and we have the strategy manager for finance, Steve, presenting. And we also have the airport board online too, so just so you're aware. So we'll just have to be aware that people are online and work with that. So I'll pass it across to you, Steve, and you can direct.
Madam Chair, Councillors, good morning. We've got 3 things that we want to cover off for the airport this morning in terms of the 3 different reports, as you're aware. This first one I think is sensible to do first, and that's to do with the additional director request that we have from the board. They believe that at the moment on their board, given the nature of the development that they're facing going forward, that they require someone as a director with some additional skills to what they currently have in their makeup. And so they've looked at various options for covering that off and believe that for the moment that an additional director would be the best course. So as I said, they've made that request of us. It's something that does require shareholder approval from the council according to the company's constitution. It's my personal view that with the right skill mix, a board of 5 should really be adequate for the airport in normal circumstances, but given the stage of development that it's at and the level of capital investment they're planning over the next while, it's certainly important that they have the skills that they're after for their board. So I think as well, personally, that there are some potential benefits in an additional member if they can find someone with the appropriate skills in terms of the future of the company and being able to get people that are able to take over in future. So the report's there for your consideration.
Okay, thank you very much. So we're now open for questions. So first up is Councillor Butt.
Thank you, Madam Chair, and thank you for the report. I have two questions. Number one, whether this additional director will be required for one term only, or it will continue to hire fifth director?
At the moment, we haven't talked about the term. It could be something that the council could have just for a single period or for the longer term. But for the moment, it gives the authority to have an additional director, and the term would be covered off at the time that the appointment was made.
Thank you. Secondly, I can see that the skills required in the new director are described in this report. Can I ask what other skills a director needs to be on the board? I'm asking it because maybe next year another director retires, and then we'll be looking for another lack of skill and looking for some other special person. Can we look for a person who has these skills plus the existing skills that are actually required?
I don't have before me the council's policy on appointment of directors and the like, but there are a series of skills that that the council looks for in appointing someone to these types of roles, and often it's dependent upon who's applied as to whether you can fulfil all the requirements that you have, but there's a whole series of skills that are laid out in the council's policy.
Thank you, Madam Chair.
The Deputy Mayor.
Thank you, Madam Chair. Thank you, Steve. It's a question following on from Councillor Butt around the skill set. So the under 2.2, there's a explanation around what the board believes are the deficits with skills.
Yes.
And I guess I'm just wanting some clarification on those, because several of those, particularly around the financial aspects of those skills, my understanding was that the chair had many of those skills and experience, and also the, I guess, the senior operations of the airport also had some quite strong skills in those spaces. Whilst they're not on the board, there was still, I guess, access at a senior level. And so I'm wondering how it was identified that those were still skills that the board lacks.
Steve, I think at this point we'll refer to the board directors.
Yes, I think that'd be a good idea.
Thank you.
So Murray will pass that across to you, or who wishes to answer?
Thank you, Madam Chair. I can certainly provide a response to that. The board undertakes an assessment of its own skill sets every year, and that covers a range of competencies. It includes those that are outlined in 2.2. It also covers off various other aspects as required to provide a good balanced governance to the organisation. I did just hear I think Alicia, you might have said that the chair holds some of these skills. That's me. I think it's fair to say that I do have an accounting background or a finance background, as well as significant governance experience too, but I don't put myself in the space of the contemporary accounting requirements for this. As we've found when we've looked at our commercialisation of our land holdings, there are certain skills and knowledge required that I don't have. We do have some of those skills with us in terms of management. So Jonathan Baker, who's our finance manager, who's actually sitting in the room with us, has some of those, but equally we've sought to get some of that experience or that advice from outside the organisation. We did find that when our previous director, John Nichols, was retiring, that was really the it was clarity to the board that those skill sets or those skills sat with John almost entirely, and that we do need to refresh those.
Thank you,
Madam
Murray.
Chair, that answers my questions.
Next question, Mr Armstrong.
Thank you, Madam Chair. Thanks, Steve. Look, my question's just a very process-orientated question. By changing the number of directors from 5 to 6...
Excuse me, could you just move your microphone a bit closer?
By changing the number of directors from 5 to 6, does that result in changes to things like quorum, majority for voting, and are those changes, if there are changes, do they also need shareholder approval? Apologies for the procedural nature of the question, but...
I believe the Constitution would cope with whatever's required in that respect. The Constitution does contemplate that the number of directors could be more than 5, and so that would cope with that okay.
Thank you. Thanks.
Councillor Naylor.
Thank you, Madam Chair, and thank you, gentlemen. Just in terms of the investment into infrastructure, I'm aware these plans have been in place for quite some time. At what point was the need for these skills identified?
We'll pass that to the airport.
Certainly. Thank you. We certainly identified them during the year when there was notification of the retirement or the resignation, should I say, of John Nichols and his replacement. And it was also notified, I think, at the same time when my reappointment was up, which was several months ago.
Okay, and if perhaps someone could refresh my memory, the term for a director is 3 years, is it?
Yes.
Yes.
And at the point where new directors are recruited, is this one of the things that's taken into consideration in the recruitment process? I suppose that would be for Steve.
Skill set, you mean?
The specific skills that are required that have been identified in this paper, is that something that's been considered in the recent recruitment and perhaps over the last couple of years, the recruitment for board members?
I wasn't personally involved with the panel that did that, but I'm sure the panel would have considered the skill sets that were required for a director, yes. But whether these specific skills were considered at the time, I'm not sure.
Okay, just one final question. The contemporary accounting requirements that you mentioned, Murray, so would those be skills that you would expect to be in your operational staff primarily? Or are you hoping to get those skills across the directors as well? I guess perhaps a better question is, are you confident that those skills exist within your management team?
It's fair to say that management and governance view on accounting matters and so on aren't always the same. One may more be technical versus contextual, and it's important that we have both. I'm certain I'm speaking here for our finance manager, who I believe has got a quite wide range of skills, but there still needs to be those that knowledge and that testing at the board level.
Okay, thank you.
Councillor Dennison.
Thank you, Madam Chair. Can I take this off the speaker? Yeah. Thank you, Madam Chair. Just in regards to the rotation of board members, can I understand when the next tranche of directors rotate?
I don't know the answer to that question. Someone else online may, but I don't know that.
I can, Madam Chair. Each year there are one or two of the board directors up for reappointment or for new members. So every year there is the opportunity to replace or reappoint board members.
Oh, sorry, more specifically, I was aware of that. Just the timing of the year, is that Is that July or is that at the AGM?
It's October.
October. Okay, thank you. And with the last skills assessment, because this proposed development is not new, and I guess this is the same question of a similar member, that when you've done your, every year you mentioned you do your skills assessment, how was it that this didn't get flagged earlier, or had it been flagged earlier and not mentioned to the selection of that new director?
Madam Chair, it's my understanding that we did point that out in advising the shareholder of the reappointment and the opportunity and the resignation of the current director.
Okay, thank you, Madam Chair, thank you.
Councillor Harpeter.
Thanks, Madam Chair. Just a quick question to Murray, if I may. The skill set of capital and debt restructuring, that's quite a specialised skill for a director, isn't it?
Yes, and it normally wouldn't be a topic that one occasion, one instance would make someone an expert. It's really someone that has had some experience in infrastructure or commercial development over some period of time at a governance level, and that's really the skill set that we're looking for here.
Thank you. Thanks for your answer.
Councillor Finlay.
Thank you. I see here that Dunedin has 4 directors plus an interim director. Would an interim director be sufficient at this time?
It's actually an intern rather than interim.
Oh, sorry. But would an interim be sufficient?
Well, they're looking for someone with particular skills that I would suspect an intern, which is somebody who's just a learning person, wouldn't really have.
Okay, thank you.
Councillor Johnson.
Thanks, Madam Chair. Thanks, Steve and Murray. So, if I'm understanding correctly, it was on the retirement of Mr. Nichols that the gap in these skills became apparent. And if that's the case, why was not someone recruited with these skills at the time that he was replaced?
The council panel made the decisions about the appointment that they've made just now, and as I said, that was their choice as to what skill sets they felt were appropriate at the time when they made that appointment.
Okay, thank you.
Councillor Barrett.
Thank you, Madam Chair. I'll have a follow-up question to Councillor Johnson's and then a couple of my own. So, in the process of council making the most recent appointment, was the airport board ongoing membership consulted?
I'm not sure. I wasn't part of that process.
We'll pass it over to the airport board.
I'm sorry, I missed that last question.
Councillor Barrett, could you please repeat?
Yes, certainly. Sorry, Murray. Was just trying to understand in the most recent round of director recruitment, we've just had an answer from Mr. Patterson here that said that it was a council appointment in terms of that appointment panel. I just wanted to understand if the appointment panel consulted you as board chair or consulted other members of the board in the process of that appointment.
I don't believe other board members were consulted. That's really for the chair of that appointment panel to respond to that. I think would be the best approach here.
I guess what I'm trying to understand, Murray, is whether the board or yourself as chair had the opportunity to inform the appointment panel of the needs and skill gaps that were on the board?
Oh, yes, we
Great.
did. I believe we did prior to the appointment panel meeting and making their decisions, but we weren't involved at all in the decision making.
Yes, understood, thank you. Just wanted to clarify the point around informing the recruitment process. The other questions that I have, Madam Chair, I think probably do sit with Murray. I'd just like to get some understanding around the overall succession planning processes that are in place for the board.
So our board looks at our membership, it looks at the skill sets, requirements and so on, and we can look at succession planning in the broader sense, remembering that it isn't the board that makes the appointments. What we would do is outline where we believe certain skills are required, whether they be of a technical nature or perhaps succession planning for a chair or whatever, and make them known to the shareholder at the right time. It's and that would be probably on an annual basis if we felt that there was the need to have a change or to advise the appointment panel of those requirements. Remembering again that it is not the board that sets the membership, but we are hopeful that we can influence it for the benefit of the company and the shareholder.
Thank you. And further then, can I understand, Murray, when gaps are identified, is it sort of the default then that that's a recruitment issue rather than a development opportunity, and what consideration is given to existing directors wanting to build their own skill sets and broaden their own reach?
I don't think it would be a default position. In fact, we would, wherever possible, look to see how we could fill that shortage, whether it be with seconded individuals or board members who are current. And when we look at our current board membership, I think we can look and see that they've got certain talents, and they will, some of them, our latest appointment, will definitely benefit from this, as we will benefit from her appointment on the board. However, it's fair to say that when we've talked quite candidly about our own skills, we all recognise that we can't step up to that particular mark in this instance. But we'd certainly look for that in any other opportunities or occasions when it arises. So we do look to use our current skills and or our current individuals and see how we can best utilise their talents.
Thank you. Finally then, so are there no, mentoring or coaching or training supports available to board members that could address and help existing board members develop the specialist skills identified in 2.2?
I don't believe to that level, no. For other aspects of governance, yes.
Thank you, Madam Chair.
Thank you. Councillors, are there any more questions? I have no one in the queue.
Madam Chair, I'll be quite happy to move the recommendations on the report.
Okay, thank you, and I'm happy to second them. So I will read, thank you very much, Steve. You may step down. We'll just bring the recommendations up. And number one is that in response to request from the Board of Palmerston North Airport Limited, it be agreed the maximum number of directors for the board of the company be increased from 5 to 6, that the council shareholder representative be authorised to sign shareholder resolutions required under the company's constitution to give effect to this change. And number 3, that expressions of interest be sought from applicants with the requisite skills to fill the position of an additional director for the company. And that's moved by Mr Mayor and myself. So we'll now open for comment. So, Mr Mayor.
Thank you, Madam Chair. Councillors, look, I support this, and the reason why I do, I spent a day in a strategic planning session on your behalf as the Mayor with the Airport Board and some of their specialists. I suppose and having been on the appointments panel, it was the stronger call was made and actually was, I suppose, evidenced on what the Airport Board wanted to do on our behalf. The reasons, I think, for the director have been made. There is now a stronger call for more specialist financial and strategic skills. We looked to appoint earlier a director that had very good business skills, but this is at another level. This is an intergenerational investment plan that they're making. It does require, it's not an on-the-job training, and yes, you can learn some general governance skills on boards, but they're actually seeking somebody with quite a high skill set, and it will take some recruitment to do that. Nelson, Hawke's Bay, New Plymouth have all really made quite strategic property and master plan developments. This is strategic for us, and the view needs to be taken into account if we want the airport to reach its vision, and also our wider freight and logistics hub strategy as well. In the bigger scheme, it's another director. It's not a huge amount of money, but it will absolutely ensure that this board has the it's one of our city's greatest assets in terms of transportation, certainly. And to keep it well governed and making sound investment decisions, we need some specialist people there. That call has been made louder, much louder now. So I'd ask you to support this. I know there has been some questions around, do we have the skill set around the board now? I think they've been pretty well answered. In a general sense, there's good financial skills. They're going the next step now. With freight, logistics, terminal, new aprons, etc., etc. So that's been well evidenced and well brought to our attention. So please support it. Thank you.
Councillor Barrett.
Thank you, Madam Chair. I see things probably a bit differently from that in terms of where this sits. I think that these intentions of the airport have been signaled over years, probably decades, if you actually look back through the records. And fundamentally, this could and should have been addressed through strong succession planning within the processes of the board, and would much prefer that is the path taken here. As we heard in response to Councillor Dennison's question, there's an annual opportunity around changes to the board, and I would hope that we could see a way through where the existing board is held in place, and in the next round of succession in 2022, there's a clear focus on ensuring that the right membership of the board is there to cover the full skill set desired by the board within a team of 5. There's good precedent, as we can see in the report, around the director numbers for other airports through the country, doing and taking on some significant changes, we heard, like in the New Plymouth case, with a small board. So I think we can get there with succession. Finally, my reluctance around this is while it's being sold on a short-term need around a change to business focus, once boards get bigger, a bit harder to make them smaller. So I would prefer that we actually leave it with the board and encourage them to use their succession processes and to use skills development processes, coaching and mentoring that could be available to actually support through this transition. Madam Chair.
Councillor Naylor.
Thank you, Madam Chair. I won't be supporting the recommendation to increase the number of board directors. At this point, I agree with the comments that Councillor Barrett has already made in terms of utilising the annual turnover of the board opportunity as a time to look at that skill mix, and I am a little bit surprised that that hasn't been identified and flagged sooner than now. Looking in the paper at examples of elsewhere, other regional airports do have 4 or 5 directors. The 2 that have been provided as examples in the paper of Wellington and Queenstown, where they have 6 directors, are significantly bigger airports than Palmerston North. And the examples that the Mayor has given of other airports that are doing developments certainly manage to be doing that with 4 or 5 directors. I think it's important to note that directors do have the ability to seek specific advice from experts if they require that, and I do think they need to also utilise the expertise of their staff and management team for these specific skills. And certainly I also think they shouldn't be underestimating their own level of expertise. As has been outlined, this is development that has been in the plans for quite some time. So yes, I think we perhaps as a council do need to ensure that our processes with reappointments of directors do get that full information, and particularly the assessment that the directors do each year of their own skill set needs to be front of mind when that recruitment process is underway, and perhaps that's the learning from this. Thank you.
Councillor Denison.
Thank you, Madam Chair. There's 2 issues I just want to raise. One is around the reappointment. I think we need to be very clear in future around what the skills are needed for each board, rather than we do take the approach typically to go out to market, and I have confidence we appoint the right person. But if there's a skill mix that should be emphasised, I think we should be weighting that in the selection and appointment process. So that's the first point. But in this case, I'm very happy to address the issue, and really it's just a mind whether this is for an interim period or for a permanent period. But when you compare it to the Te Manawa Trust Board that we have, which has 9 directors or trustees, the Regent has 8, I've just confirmed. 5 to 6 is not really pushing the limit too far out. I know this is a full commercial board and a mix of talent's important to oversee it, and the Mayor's quite right. This is significant investment, it's generational, we want to have our hand on it, and ultimately we're going to pay one way or another, whether it's through the remuneration of directors because of having an extra appointment, or through the operation. They need the information, they need the advice, and the last thing we want to do is have it cost us because we made some fundamental mistakes because they didn't have their eyes and the expertise over it. So happy to support it, but do flag my concern around the appointment process for the future. Thank you.
Deputy Mayor.
Thank you, Madam Chair. I am happy to support the recommendations in front of us today to increase from 5 to 6. Probably similar comments to Councillor Denison, and I guess also acknowledging, actually I agree with most of the comments that have been said on both sides of the vote today, because I think that perhaps we've identified within the process that there may be a skills assessment done, but it sounds like the panel have exclusive say on the appointment process, and so perhaps actually we may need to bring, whether it's the airport board or the chair, into the room a little bit more with that process to ensure that actually there is still a reflection of the wishes of the board as well, because we appoint the board to make, to run the operation, to make these decisions on our behalf. And so I think we would want to take their view into account. It is clear that there is significant investment that does require specific skill sets which, as identified, are not currently catered for, and so I'm happy to support the increase, I guess, with the view that actually not needing to put an amendment around it, but actually it's for this point in time. I wouldn't think that actually 10 years down the track, 20 years down the track, we're still needing this level of governance for the airport board. I think we've kept it quite tight and neat to date, and it's worked really well for us. And so the provision to extend to 6 doesn't mean 6 need to always be appointed. I think it means up to 6, and so just keeping that into account. But I'm happy to hear that request and support it today. Thank you.
Councillor Harpeta.
Thanks, Madam Chair. I'm also going to be supporting the recommendation to increase it to an extra person. I think this is about our airport, about Palmerston North. It's not about the number of people, it's about the skill set required, which is what Murray was talking about. We need a specialised skill set, and it's about the capital and debt restructuring, which is a specialised set that isn't there at the moment. And they are looking at new plans going forward for the airport, and they need to cater for that on the board, and they haven't got that skill set. And they need to look at getting someone different on the board to cater for those needs. So we need to enable them to do that, and we can't do that from this arm's length. That we need to be able to get someone that can do that on the board to help them do that, to go forward. This is what enabling a board is doing. So we need to support this recommendation.
Thank you, Councillor. I'd just like to comment, and I too support the recommendation. And having been on the appointment panel, I think we probably just need to actually have a look at how we need to review how we appoint. I think one of the issues is the way we advertise the positions, because we just advertise it as an airport director and we don't advertise that this is specifically the skill set that we need. And I'm very comfortable of who we appointed, but I think if we'd advertised, we might have got a bigger selection that we could have perhaps appointed somebody with that skill set. So I think that's lessons to be learnt. So I'm certainly take that on board in future. One of the things is that the airport board, we can't wait till October to appoint somebody else. It's nearly a year away, and we've got millions of dollars worth of asset tied up there that we need some competent person on that board to be able to help the airport with their decisions. If we don't appoint this today, all we're doing is increasing the cost to consultants, because for them to be able to achieve their objectives, they're going to have to employ somebody in that role. And I certainly would rather appoint a director than the board having to employ consultants at horrendous costs. So you're not going to save any money by having an extra director. I don't think it matters whether you've got 4, 5 or 6. It's the competency of the people that you need on the board. And when you look at Palmerston North, I'm not comparing us to Rotorua. We're a big logistics hub. We want to be out in front as one of the best airports in New Zealand, regional airports. So the fact that Rotorua's only got 4 and we've got 5 is totally irrelevant. It's a red herring. So we need somebody competent on that board now, and so I suggest that we support it to give the airport the opportunity to be able to succeed. That was the final comment. Mr Mayor, do you want to close?
Yeah, I will. Thank you, Madam Chair. Look, just want to thank you for your comments around the recruitment process, and this probably will take some shoulder tapping. This is not a on-the-job training, and there has been actually a strong succession planning. The last 2 rounds of appointments, we've seen very capable businesswomen entering that board. There's been a gender rebalance there too, and I think that's been really, really healthy. As a council, we should let our airport board get on and do the work that we charge them to do. We're entering a major redevelopment on that side of the city. I think it'd be quite foolish to wait till October or encourage them to get some on-the-job governance training. This is about capital raising, debt restructuring and strategic financial skills. They just don't fall off a tree. So we've got to let our people that we charge with here as the airport board do that job well. So please support this. It is unique. We are going through a unique stage, and yes, maybe in 2 cycles we look at it. they've discharged what they need to do around the development, and they may fall back down. But we shouldn't get hung on just little numbers, and are we at the same size as Rotorua or Hawke's Bay or whatever it is. We're very different, certainly in terms of the freight. So this is where a lot of that effort will be going. So please support it. Thank you.
Thank you, Mr Mayor. Right. Do councillors want those 3 recommendations split out?
Could you split recommendation 1?
I thought that might be the case. So we'll vote on number 1 first, and then we'll vote for 2 and 3 together. So we're now voting on number 1.
Sorry, Hannah, my machine's doing funny things and I actually wanted it to be the first one. I'm having, yeah.
We'll do the vote again.
Yes, please.
Okay, so,
Different machine?
yep. Okay, so we're now voting again on number 1. So that is carried 13 votes for and 4 against. We're now going to vote on numbers 2 and 3 together. And that is carried 17 votes, so that's unanimous. So we now move on to item number 7. So again, we have that presented by Strategy Manager of Finance, and that's Steve. So ready when you are, Steve, and that is on page 21.
Yes, Madam Chair, thank you, and councillors. The annual report each year, of course, is part of our accountability cycle for entities like the airport. It's a little bit later than usual this year due to COVID mainly, but also because the company was addressing some complex accounting and reporting issues as part of finalising their accounts. The company's performed a bit better than we expected through the SOI in a number of ways, and the board chair and the CE have an overview they wish to present to us that cover off the year, and they're also going to make 1 or 2 brief comments about where they find themselves right now this year.
Okay. Thank you very much, Steve. So online we have Murray Georgill, who is the Palmerston North Airport Chair, and David Langham, who is the Chief Executive. So we'll pass it across to you, gentlemen, if you wish to comment, and then we'll take questions.
Thank you, Madam Chair. I do have a few comments. They won't take me very long. And then David's got a brief presentation which provides us with a good view of the year. And already it seems a long time ago. It's 5.5 months back since the end of the financial year. And as Steve just pointed out, there were some complex accounting issues in finalising our accounts, and the auditor, Audit New Zealand in this case, were very apologetic about their ability to provide advice and service against our accounts at an earlier date. So they have gone on record to say that it was due to their delay in getting this out, hence, or else we would have had this earlier. The year, of course, ended 30th of June, and we'd have to say it was another year without precedent, albeit that the previous financial year we had our first experience of COVID and the impact that could have. I believe we did very well as a result of that. by responding to the environment. We reduced our expenditure, we reprioritised our capital intentions, and we set ourselves the task that we would be ready to mobilise whenever the passenger numbers returned. So during that financial year 21, we did act within our self-imposed limits. We exceeded the SOI targets, and we did mobilise our responses to the commercial precinct and the terminal development project, terminal development plan. And the result of that was, albeit a lower activity for the year than the previous year, it was higher than our intentions, our SOI, but it was lower than had been the earlier case. We had prudent management of resources. We retained our services that we provided to all of our customers. We retained our key personnel. We had the ability to initiate the development of the land holdings, and we saw quite a value accretion in the net equity of the company. So that means shareholder value, shareholder wealth increased during that year, which I think is a very good result given the impact of COVID-19 over the financial year. For the future, we have really two significant views of the future, or two significant aspects that we need to attend to, and that's improving the passenger experience, and that's right from airport drive to the airplane ramp. So that includes arrival at the terminal, it includes parking, it includes the dwell time within the terminal itself, it includes the departures, and that's for all of our passengers and all of their friends and family who will be here at times. So that's our biggest significant single project, which is our terminal development plan. And I can tell you that subsequent to the year end, we have gone on to appoint a lead architect on that, and looking at a concept design. That's all we've committed to at this point. But we have done so in line with our intentions to improve our terminal. The second of our major initiatives is around further utilisation of our land holdings. For those who have visited the airport in recent times, you'll see there's a significant development opposite the airport roundabout, Wairaka Place, and that is moving along very well. And of course, the idea of that is that it attracts more business to this precinct and to this community. It assists with our distribution hub, and it also, for a company perspective, diversifies our revenue base, which is really important. These together give us pretty bold targets, but they're well aimed at assisting our customers to use our facilities and to benefit our shareholders in the long term, such that we will see shareholder net equity continue to grow into the future. So that's a very short view of the past and the future. And David has a presentation now. Is it? Do you control it from here, or is that from? Oh, you do.
I can control it from here currently.
There's technology for you. Right.
Share screen. Oh, I don't like the share screen.
We're just getting to it.
That one? Yep. PowerPoint. Right. Brilliant. See it there? It's on across.
Yep.
Good
Perfect.
morning, Madam Chair, councillors. Can you see the screen?
Yes, all go.
Thank you. Okay. Well, Murray's given a very good overview of the year. I've got a little bit more detail to share with you, I guess. Really, F21, year ending 30 June, was a year of two contrasting halves. H1, as I've said there, was really about survival. Obviously, with COVID hitting, it was a serious impact on passenger numbers. we had to really look at how we would survive from a cash flow perspective, and so there was a major cost review program undertaken, a range of CapEx deferrals, a restructure of our business that saw something like 9 of our team members leaving us. It was a dire time. We focused on business resilience, we focused on compliance, and we really focused on keeping our team motivated during that period. 177,000 passengers were carried during that time, which was obviously a significant drop on prior years. H2, by sort of October, November, December, we started to see passenger numbers, I guess, stabilising, and so we started to take steps towards reinvigorating our CapEx plans. And as Murray alluded to, we kick-started Wairaka Place, and we also started to progress on some pavement programs. Through to the end of H2, we achieved or carried 224,000 passengers, so about 25,000 increase on the first half. I just pop to this screen. For the total year, we carried 401,000 passengers, or just under. That was a 15-year low, so I think looking back, 2006 was the last time we had numbers that low. And you can see there in recent years the journey we've been on with the purple patch of Air NZ growth and Jetstar, followed by the impacts of Jetstar's withdrawal and COVID. However, I'm pleased to say that we did make some very good achievements during the year. Our health and safety focus continues to be our top priority, and we achieved 0 lost time injuries. We maintained our Part 139 compliance, so that's our CAA certification. And as with all airports, we had to develop and implement a safety management system which received CAA certification in December 2020. Again, touching on our team, we launched our One Team Wellness program in September 20, which really focuses on how we can look after our team members. While we weren't spending money as such on CapEx, we continued to invest in understanding our assets further, and so that entailed more work on our asset management plan. We started to introduce changes in our pick-up and drop-off area, which included the conversion to the parallel parking that you see currently. We also invested in customer experience research to better understand what our various customer groups want. Our sustainability journey continued as well, with level 2 reduction being progressed, along with a range of waste to landfill and water reduction initiatives, and I'll touch on them a bit more in a second. In terms of the financials, again, Murray sort of touched on them, but we achieved income of 8.35 million, which was actually reasonably strong compared to the SOI, which was set March to June in 2020, when COVID was upon us. So 8.35 million was a satisfactory result, not as good as the prior year, of course, but an improvement over where we thought we might get to with the SOI. In terms of expenditure, we managed to achieve reductions over the prior year, and I think we got within 2% of our SOI target. There were some expenses on contractors and consultants that took us slightly over that SOI budget. So those two results translate into an EBITDA result of 3.59 million, below the prior year, but again, encouragingly above the SOI, and really driven by that benefit of income, which came from the passenger numbers, which were over the SOI number of 265,000 from memory. That all translated into a net surplus loss of $27,000 versus the prior year of a 1.63 million profit. Although a loss, it was still ahead of the SOI. In terms of our balance sheet, we continue to to grow, shareholder equity increasing to 68, just over 68 million from 67 million. CapEx was pretty close to budget in the end, although we did stop in H1. We did gather pace in H2, so we managed to invest $4.3 million in our asset versus an original target of 4.7 million. So the key projects alluded to by Murray, including Wairaka Place, but also the investment in the two refurbished rescue fire appliances. We didn't manage to get around to airside pavement works. That is currently underway. I hope you can read that. It's a little bit small, but in terms of our performance measures, there are really just two areas where we missed the mark, and that's interest coverage ratio, where although we were ahead of our SOI target, because of that income shortfall, we weren't able to hit the requirement of a 2.25 metric. And the other one is net promoter score. While we increased versus prior year with a result of 32 versus 30, it was well below our aspirational target of 55. I'm just going to touch a little bit more now again on our sustainability journey. So again, during the year, we were targeting level 2 reduction of the airport carbon accreditation program, which I'm very pleased to be able to announce. Certification was received this Monday, so we are now level 2 certified, and we're now on our journey to level 3 and level 4. In terms of level 2, what does it mean? Well, really, you might just want to tell them about the aircraft. Yeah, sorry, if you can hear an aircraft in the background, that's the issue with being at an airport. Assuming you can hear okay.
Yes, we can.
Thank you, Susan. So in terms of level 2, that was about proving that we had a reduction in our carbon footprint versus the prior year. So again, that was certified, audited and certified just this week for the year ending 30 June. We continued our transition away from natural gas, and as I said earlier, other programs included waste to landfill, which I believe we're working very closely with PNCC on. We achieved a 76% diversion rate for waste away from landfill. And we're also continuing to understand our water consumption. So in a way, we're just continuing the mapping of what our water consumption is before we can understand what reductions we can make. So looking now to the future, again, Murray gave a good overview of our real focus on income diversification and freight and logistics, of course. I guess from an aeronautical perspective, volatility does remain. Today, we're very lucky to have our Auckland flights back. I think there's 6 today, and then up to 9 from tomorrow, which is fantastic. Christchurch, we're up to 5 a day. So at the moment, things are looking positive, but we know where we've been over the last 18 months. And so, of course, we have to be very cautious about what the future looks like. So with all of that in mind, our latest view on the current year is that we'll achieve 385,000 passengers, so below what was a budget of 480, and that'll take us down to a level not seen since 2003, 18 years ago. Notwithstanding that, we have seen enough positivity to want to continue with essential projects. So our airside pavement works are continuing. Right now we're upgrading one end of the runway, and in Feb we'll upgrade the other end. We're also embarking on some work on Airport Drive in some highly deteriorated areas towards the School of Aviation. You'll all be pleased to know that our escalator has arrived from the United States, and that will be installed, I believe, from mid-January once we get over this rush that we're anticipating with Auckland now out of lockdown. Our work on the pick-up and drop-off area continues with further enhancements to what will be canopies in that area. And as Murray alluded to, one of the biggest projects going forward, of course, is our terminal development plan, and our architects will kick that off in April. So in terms of income, we believe it'll be slightly ahead of current year, just marginally at this stage. Expenditure has increased along with the work that's going into the TDP and other CapEx work. An EBITDA result broadly in line with this year, and a net profit before tax of 2 million. So really benefiting from a strong income and less below the line items that we received this year. In terms of sustainability initiatives, so again, we've achieved level 2. We're now going to jump to level 4 of the Airport Carbon Accreditation program. So that means engaging with a particular third party here at the airport to support them in their sustainability journey. But also in terms of our own, we've got some more work to do. So we're about to decommission our gas boiler and complete the installation of HVAC, which is going to have a significant impact on our carbon footprint. I think natural gas is something like 40% of our footprint at the moment. So we're going to be removing a significant chunk of those emissions, and we'll continue our waste and water initiatives. With the TDP, we will be looking at green building standards and how we can factor those into the design of the terminal. We have set ourselves a target of achieving a 37.5% reduction in Scope 1 and 2 emissions versus our 2020 level by 2035, which keeps us below that 2 degrees C trajectory. Once we get there, we'll have to look at ways we can offset our where we bottom out in terms of our emissions. Thank you.
And thank you. We're now open up for questions. So first up is Councillor Johnson.
Thanks, Madam Chair. I've got 3 questions. The first one is around the Net Promoter Score, which is still a long way off your target. Did you have any particular insights from the surveys? I mean, I note the comments about surveys being filled in by children and all the rest of it, but the surveys that could be looked at as genuine feedback, what were the insights from those surveys around what needs to be addressed to help raise the Net Promoter Score?
There were a couple of key ones that sort of repeat around Wi-Fi, so speed of Wi-Fi within the terminal. I think the escalator being out of action for so long had an impact, but I think in general just people also had just poor experience in general here at the airport with flights and what they perceive perhaps as a tired terminal.
Okay, thank you. And so have you got something in the plan to address the Wi-Fi speed? I note the escalator was addressed.
Sure, yeah, so we have addressed the Wi-Fi issues. So we did engage third party to come in and have a look at it, and that's now gone away as an issue in terms of our monthly Net Promoter Score results.
Okay, thank you. And then around the lack of the dividend, on page 38 of our papers, in your overview comments, you commented about an ongoing suspension of the dividend, but I note that the revenue at the moment is broadly equivalent to the revenue in 2018 when we did receive a dividend. So can you speak to that?
The real question about a dividend is also about the shareholders' continued investment in the airport, and at this stage in the proceedings, cash is quite vital to this organisation to ensure that we get the best investment into the organisation, into all its assets, such that we can diversify our revenue, which will contribute to the bottom line, which will enable cash dividends to return. It will also, without them at this point, assist in the company not borrowing to the same extent for the likes of the terminal development plan. So really we see that over the next 3 to 4 years, as we go through terminal development plan building project and commissioning, that over that time cash is very essential to maintain, to retain, and to invest in the organisation. You will see increases in net equity and shareholder value or shareholder worth. It just won't be by way of cash leaving the company going to the shareholder. It'll be retained within the company. At any stage later on, of course, that could be cashed up in some way, shape or form. That'll entirely be up to the shareholder.
Okay, thank you. And then my final question relates to the financial statements on page 48, where there's been a significant increase in general administration, but it's not explained as a significant variance. So are you able to talk to that?
What's that one there? Gone down. It's gone down from 56 to 877.
So it's page 48, and
Yep.
total administration has gone from the SOI of about 568 to the actual of 877.
Sure. So it's down on the prior year, but yeah, we didn't quite achieve the result of the SOI. And as I alluded to earlier, we did spend money on consultants and contractors. We lost our finance manager at the financial year end of F19, and we did have to hire someone in until our present finance manager joined us. We also had a range of consultants assisting us with tax matters and terminal development in the early stages.
Thank you, Madam Chair.
Councillor Harpeter.
Thanks, Madam Chair. Hi, this is a question for you, David. I'm interested in your comments around the traffic light system that's been implemented by the government, and your comments that you put is that the airport remains concerned and cautiously optimistic regarding ongoing recovery from COVID in the second half of F22. This is on page 68 of our papers. Just in regard to the traffic light system going forward, you say you're cautiously optimistic with flights, and I just wonder, you know, I've travelled to Christchurch probably 5 times in the last 4 months, and every flight's been full. So just tell me about why you're still cautiously optimistic when everyone's now free to travel. Why you're not really optimistic?
Well, yeah. Well, I guess we've seen what's happened in the last year. I guess what we're saying is we don't know what's around the corner. It's great to have AirNZ being so bullish and investing again in services, but yeah, look, we genuinely don't know what's around the corner for us. So we've just got to be very, very careful. Obviously, we're embarking on a big capex spend, and so even in a normal year, we'd have to be a little bit more cautious about watching our income.
This is about your travel numbers, though, not about your investment. This is about the travel numbers.
Yeah, well, travel numbers translate into revenue via aeronautical charges and car parking. So it's still a critical part of our income. Over 50% of our income comes from those things. And so if passenger numbers were to suffer again, we'd see income suffer, which would have impacts on cash flow and our ability to spend on those capex projects.
Okay, thank you.
Councillor Naylor.
Thank you, Madam Chair. Thank you for the presentation. Just a question from the presentation to begin with for you, Murray. The net profit before tax on one of the slides, it showed 2 million, and in brackets it said 27,000 loss. Is that I'm just trying to understand the perspective. Is that as compared to last year, or what's the 27,000 loss relate to?
So the 27,000 loss is the bottom line. That is the result after all expenses, including taxation. And so there was a taxation element in these accounts, even though we had, in the end, a deficit. Jonathan can explain exactly why that happens, but the 2.3 million is our profit before depreciation, interest and taxation, EBITDA. So there was 2.3 million there versus last year 2.3 million, pretty much the same. It's the end result in last year with revaluations and taxation. Last year were reasonably minimal. This year, quite expensive. So we've actually got a loss in our revaluation this year, whereas of 800,000, whereas last year was about 400,000. So, you know, these things impact significantly. That's why they're isolated towards the bottom of the account so we can see what that impact is. We wouldn't expect those to be ongoing to the same extent.
Okay, thank you. And just, Councillor Johnson's already mentioned the dividend, and obviously that's been suspended last year and this year. I'm trying to recall from the statement of intent, when are you anticipating that dividend will be reinstated?
At this stage, we haven't got our sights firmly set on exactly when, but I would believe that as soon as we've completed the terminal development plan, that we should be in position then to generate or return to cash dividends. That's if the shareholder wishes to have them. It may well be that you say continue your investment in the airport and in terms of your income diversification or whatever else is significant and worthwhile investing in. But that would be my general guidance, that we'd be talking 4 years from now, 2025, that before we could consider paying cash out of the organisation.
Okay, thank you. And I just have a few more questions that are probably for you, Steve. The paper identifies the resolutions in 2.12 on page 24 and 25 that we need to decide on, and the one in 2.12.4 relates to a request to increasing the remuneration of directors to 157,000, which is about a 45% increase on what the current remuneration is. And I guess I'm just wanting to get a bit of an understanding of perhaps some context for that. In the chart on page 24 with comparisons to other airports, there's other regional airports there, and then the bottom one is Queenstown, which has about 1.8 million passengers and obviously is quite a bit bigger than Palmerston North. I'm just wondering, in what context has that been included in that chart?
Well, I'll answer first, and if the company reps want to make any comments, they can. From my perspective, what I've reflected here is the request from the company, really, and you mentioned an increase as big as 45%. Well, that is coping with an additional director and paying a figure for those. So without the additional director, that would be a figure of 135,000. So from 108 to 135, and so the additional director is part of the reason. In terms of the comparisons, we just looked around provincial type airports to see what was being paid, and it's just there for information, really, in terms of that.
Okay, thank you. And just for context, what has the CPI for the past 3 years been?
I don't know that off the top of my head. It's been 5% for the last 12 months, but 2 or 3% each of the previous years from recollection.
Okay, and so and just for context, in the 2018 decision, the remuneration package was increased at that point as well. Was that about 20% increase at that point? From 90?
It wasn't a huge increase from my recollection, but I don't have the figure in my head as to what that was.
Okay, thanks. I'll leave the rest for, thanks.
Mr Armstrong.
Thank you, Madam Chair. Thank you, David and Murray. My first question was around dividends, which I think has been satisfactorily covered. But secondly, I noted your comments, David, around your interest coverage ratio. And I just wondered if you could elaborate a little bit on bank covenant headroom, unutilised borrowing facilities in place, and more generally the relationship with your bank funder, given the environment and the history over the last year, 18 months.
Yep. So in terms of headroom, we're comfortable at the moment, something around $1 million of headroom, I believe. In terms of our debt level currently, Jonathan? 10 million. Of our facility of 16.1. So about 15 million debt versus a facility of 16. As you noted, the interest coverage ratio is below the target, but above where we thought we'd be. And we believe it will improve further in the new year.
And what sort of headroom is that against the bank covenant?
Could we just ask our finance manager, Jonathan Baker, to answer that?
So the bank covenant that's in the annual report, which is below the SOI target, includes the revaluation loss. So the actual bank covenant itself is exclusive of the loss. So I think that's in the annual report in one of the notes. It's about 3.6 if you exclude the revaluation loss. So we are above our banking covenants. There's no issues or risks in that space. I believe an upcoming paper deals with our ongoing relationships with banking, funding, and how that will look sort of going forward into the future. But in terms of our current relationship with BNZ, they've been excellent. They're great to deal with. We have a really good working relationship with them day to day.
Thank you. That's great. Thanks.
Councillor Butt.
Thank you, Madam Chair. I probably have two questions, one from Steve and then from David. And probably the same kind of question Councillor Naylor has asked. When you recommend or request increase in remunerations, what is the basis? Is it on the basis of time these people are spending on looking after the matters, or it is based on the total income or profits, if you like? What is the basis of this? I can see the clear difference between other airports and other boards. There's a big difference. But what is the basis of this difference?
Well, in our case, I think our board remuneration would be, we've got to have a balance between what's required to attract appropriate board members and I guess what the company can afford and what's appropriate to pay. So there's no right answer as to what's an appropriate level. The company, I think, has been reasonable in its requests over the years in terms of remuneration. The council has responded and increased it, sometimes not to the levels that have been requested on one occasion, but it is having a bit of an eye for what is being paid to others in the infrastructure field, similar types of entities, and other entities that the council's got shareholders for as well, having a bit of an eye to those. And certainly in the company's case, it's reasonably, considerably less than what we're paying for one of the other CCOs that we have.
Thank you. And congratulations, David, on achieving that level 2 accreditation. But can I ask, how much this COVID, how much the role COVID has played in achieving this? Obviously, there was less traffic, less number of people on the airport. Are you confident that even the situation was normal, then we would have achieved this level?
That's a good question. I guess it's fair to say that a lot of our greenhouse gas emissions are a fixed level of emission, if you like. They're not really variable depending on passenger numbers. So, for example, electricity usage or heating and cooling within the terminal, those things don't really change based on passenger numbers. We have to have this terminal illuminated and warm or cool, irrespective of the number of passengers. So very, very little impact, Councillor.
Okay, just one more last question related to the same one. In your last slide, you said you will be offsetting some of the residual emissions. Are you planning to buy credits, or are you planning to plant trees or plants?
That's all ahead of us, Councillor. We're not sure yet. We're not clear what level of net emissions we will have, but that's part of the journey that we're on, is to understand what we could do in the future.
Thank you, Madam Chair.
Mr. Mayor.
My questions have been already, I was way in the early part there, thank you.
Councillor Barrett.
Thank you, Madam Chair. The question probably sits for the airport. Can you just give us a reminder of how far in advance you're forecasting passenger numbers? Forecasting might be a bit of a strong word, but how far in advance you're having an outlook about passenger numbers?
We have believe it or not, a 30-year view that we required for our master plan and for air noise planning. But in terms of the SOI, we've got a 3-year view.
And thank you. Within the 3-year view, do you have the upper and lower bounds of that forecast?
No, not on hand, Councillor.
Okay. That's all right. Thanks, all.
We can certainly provide them after the meeting if that's what you would like.
Oh, thank you. I think no doubt they're in my record somewhere, but not front of my mind either. I suppose the final thing I wanted to establish then is just that within those upper and lower bounds, that you do have a viable, I guess, business, to put it summarily.
Yes, so in looking forward, in particular around such things as the terminal development plan, you know, this is based on the number of people that traverse the terminal in a year. We've got to have confidence that the numbers are going to be there to support it. And in so doing, we've had quite some conversation with Air New Zealand about what their views are of the future. They stay in touch with us about where they see numbers going, and they tell us about, on a very short-term basis, they tell us about what those flights will look like. They'll tell us what they believe will happen in the longer term, about travel and substitutes for travel, such as digital and so on, and whether or not there's electric powered aircraft versus aviation fuel, and so on. So those all have to come into our consideration before we can commit to the major investment. So at this stage, we're going down the concept design to make sure that we understand what we're looking at is what we're looking at, and then at the same time we look at it and say, is this the way of the future, before we commit to it. So you can be assured we will not be developing and funding something that isn't commercially viable into the future.
Thank you for those answers, Madam Chair.
Thank you. Are there any further questions, councillors? I have no one in the queue. Okay, so we're moving on now to the recommendations. Thank you, Steve, and thank you to the airport. We'll now move on to the recommendations. I'll move recommendation first, because I know we've got an amendment for number 2. So I'm happy to move recommendation 1. And thank you, Mr. Mayor. So we'll vote on that first and then we'll go to 2. Is there any comments first on, we'll take comments on both recommendations, but Mr Mayor.
Okay, so Madam Chair, are we taking comments on?
Sorry, no, we're only, my mistake,
just
we're
on
only
one.
on
Okay,
one, sorry.
all right. Okay, well, yeah, look, I just want to congratulate the airport. It's been a really frustrating year. It must be really frustrating for them, giving us forecasts and probably to address some comments or questions. I think it is a viable business. There is some challenges there, and I think that's why they teased out their diversification of activity and ultimately revenue. So it's just not pure aeronautical like most of our colleagues around the country, which is just passengers. We have multiple carriers, increasing the ports, the destinations for passengers, also the freight. So, you know, we saw some numbers there and some comparisons, but just about all of them don't carry freight, only Christchurch, Auckland and Palmerston North. Also with the property development with aeronautical connections, the flight training with Massey Aviation, we all forget about that, and yet that makes up a really strong connection, and of course the helicopter work that's carrying on out there as well. So I think Palmerston North Airport has done well. Financially it's been difficult, but the majority of the SOIs have been achieved or exceeded. You know, the assets worth, and I'm not sure what the new valuation is, but in terms of the land holding there, but it'll be well in excess of 70 million plus now, I'm sure. Just want to finish off, Madam Chair. I mean, as I said, Palmerston North Airport at Milson is unique. It's actually 80 years old this year. So it was established in 1931. The city got involved a few years later. Union Airways was established there, and of course they became NAC and then became Air New Zealand. So you can sort of say Air New Zealand's home is Palmerston North. The first commercial flight in New Zealand left Milson or Palmerston North in 1936 to go to Dunedin. And we've always had a strong connection to the Royal New Zealand Air Force, and especially RNZF base Ohakea. So we should be proud of our airport, and in difficult times we should be really trying to support them too. So I just want to congratulate them on just getting through what's been quite a difficult year. Thank you.
Thank you, Mr Mayor, and I agree with your comments. Councillor Naylor.
Thank you, Madam Chair. I also want to echo the Mayor's comments. I really appreciate the work that the Airport Board have continued to do despite challenging times with COVID, and want to thank them for the ongoing work in preparing for the future, particularly the development of utilising the land holdings and looking to diversify other forms of revenue, which I think will be really important for us as a city going forward. I do think that the airport is in good hands, and just want to say that we appreciate the work. Thank you.
Councillor Barrett.
Thank you, Madam Chair. And firstly, just to clarify what was perhaps an overly blunt question, to use a word like viability, I was really just wanting to get at the points around the significant uncertainty that that whole industry and sector still faces with COVID and other uncertainties on the horizon for travel and mobility in general. Main thing I wanted to comment on really was to very clearly congratulate the airport on their Level 2 certification. That's something that we kicked off in the last term, and to see it really starting to have significant traction in this term is very heartening to me, very exciting. And especially because actually what we're hearing from the airport is actually making some quite chunky changes. So not just the trimming around the edges, but things around, repowering HVAC systems. Like that's where you get your significant gains, step changes in terms of emissions profile. So I think it is only too right to congratulate the airport on embracing that challenge and really leaning into it, and very, very pleased to see that result today. I'm also, quite heartened overall by the result, even though it was a very challenging year around travel with COVID especially, to see that we have nearly a neutral return, a very marginal loss at $27,000. To me, that's really, really heartening, even though it did come at the expense of a dividend to the city. I think that, we as a city probably would do well to think about to what extent we want to rebuild dividends on the back of very high emissions activities in the future, and have a considered approach around how we do help the business at the airport continue to diversify so that there are also significantly lower emissions revenue streams as well. I think that's a conversation and debate for another day, but just to say that for me, sort of rebuilding dividends on the back of avgas is probably not exactly a view of sustainability. Madam Chair.
Thank you. Councillor Harpeter.
Thanks, Madam Chair. I just want to also congratulate the airport. I think the community have spoken around the new drop-off and pick-up around the terminal. I think that's a big improvement on what it was before, and they have really enjoyed that new system that you've got in place. You've done really well in this trying times of the last 6 months, so well done on your numbers. I still do need to be, I'm an optimist and I'm positive, and I think that you need to be positive with your numbers going forward. I think the domestic tourism environment is very positive about travelling within New Zealand, so let's just continue to be positive with those numbers, but well done.
And we have Councillor Bowen online.
Thank you, Madam Chair, and apologies if I've been popping in and out. We've got trees down here and my power is a little bit dodgy. But anyway, I did just want to take this opportunity to join others in congratulating the Airport Board, particularly I think for a positive approach in these uncertain times. So congratulations on a strong report for the period, and particularly congratulations on your commitment, I think we'd call that, to embracing the opportunities that we face as well at the moment. So thank you very much from me, Madam Chair.
Thank you, Councillor. And I'll just wrap up and again just congratulate the airport on a good result and wish them well with a new traffic light system, and hope that hundreds of thousands of Aucklanders will be flying to Palmerston North Airport. My sister's one of them. Right, now we'll move to the voting of that recommendation. And that is carried unanimously. We'll now move on to the second recommendation, which I am moving, and I have a seconder, Mr. Mayor. And I will read that out, that the council shareholder representative be instructed to support the proposed resolutions as listed in 2.12 to be considered at the annual meeting of Palmerston North Airport Limited, to be conducted by way of resolution in writing. And we now have an amendment to that, I believe. So we will take the amendment. I'll read that out again so we're quite clear. So the amendment is that the council shareholder representative be instructed to support the proposed resolutions as listed in 2.12 to be considered at the annual meeting of the Palmerston North Airport Limited, to be conducted by way of resolution in writing, with the total remuneration of directors being $135,000 per year. And that is moved by Councillor Naylor and Councillor Petrinas. So Councillor Naylor, you wish to speak?
Thank you, Madam Chair. Yes, I do think it's appropriate to review the total board member remuneration, as it hasn't been changed since 2018, when it had a 20% increase to $108,000. I think given the previous decision in the previous item to increase the directors from 5 to 6, this also needs to be taken into account in the decision. Obviously, in our papers we had a suggestion of us approving 157,750 as the total remuneration. But I'd just like to bring colleagues' attention to the table on page 24, which I think is a good indicator of where we should be setting the total directors' fees. The other regional airports that are listed there as a comparison, when you exclude, in the fourth line down, when you exclude Queenstown and Palmerston North, is 134,000. I think that's probably about right. I'm not quite sure why the Queenstown airport was included there, whilst we might aspire to grow to be the size of Queenstown Airport. We're certainly not there yet. So the average that is in the paper of 157,000 was including the Queenstown, which obviously raised that total. So if what I've proposed, I think is reasonable. It's a moderate increase. I think it's recognising the additional director, as well as around a 7% increase on top of that, which is quite similar to CPI. One of my helpful colleagues indicated that CPI was around 7.9%. So if we're to add an extra director and add about what CPI has been for the last 3 years, then that's where we get to 135. And I do just think part of our role is to be fair and reasonable. I think expecting what's in the paper was a 45% overall increase, which is unnecessarily high, and perhaps the examples, so I'll leave it at that. That's what I'm proposing. I think that's fair. I think that gives the, we've recognised the request from the board to increase the directors. That's perhaps a little bit a bigger board for now, but that was the majority view. So I think giving a total remuneration of 135 certainly gives the board the ability to look at how that's distributed across directors. Thank you.
Councillor Johnson.
Thanks, Madam Chair. I'm happy to support the amendment. I think we need to be understanding of the economic environment that we're in. Lots of people have taken significant wage restraint throughout the pandemic period in this country. Many people have taken wage cuts, other people have had wage freezes. In that context, what I calculated to be, taking into account the extra director, a 25% increase, even over 3 years, seems to me to be the wrong kind of message that we want to be sending. I doubt there's very many people in the city that have had a 25% increase over the last 3 years. Given that it is not an annual increase that we look at, looking at CPI from the inflation calculator of the Royal Bank of New Zealand does give you around about 135,000 if you assume that there were 6 directors at the start. So I think that this is a fair increase. I'm not prepared to support a huge increase unless there's some significant justification for it. And in terms of being able to recruit the right people to the board, you know, the jury's out on whether increasing fees helps you recruit the right people. A fee is good because it recognises the time commitment that people are giving, but to some degree there's an element of public service in being on a board of a city airport. It's not just a commercial appointment, and I really don't think that what I would consider to be an excessive increase is appropriate, either to achieve the justification that is given in the paper of recruitment, nor does it send the right message. And particularly in an environment where there's no dividend coming back to ratepayers, I'm very uncomfortable to approve an increase to the amount suggested in the paper of 157,500 as the pool. So that's why I'm happy to support this amendment.
Mr. Mayor.
Thank you, Madam Chair. I take a differing view, and there's some reasons why These aren't commercial board rates at all. It is out of step with comparable CCO airport boards. And look, Hamilton is the only one there that is doing the diversification that we are seeking from our board. All the others are pure either tourism or passenger related airport boards. It's 4 years since I've had an increase. Look, you can skew the numbers any which way you want to, and we've just heard some of them. And look, I get people don't want to be seen to be paying more, but we're asking this board to do some exceptionally heavy lifting in the next 3 to 6 years. If we want to reach some of our visions, some of our strategies around distribution, we need to pay a little bit more. They haven't. This is the unfortunate thing when we try and artificially hold or review these sort of fees, and you've got a 4-year gap. They were underdone 4 years ago. They're underdone now. So I won't support this and ask you to support the substantive motion and just let this board do its work. We can judge them on that then. Thank you.
I'd just like to comment too. I won't support this. I think it's important that we are paying a good director's fees. We are going to be going out to advertise again for a specialist person to go on that board, and people do look at fees when they apply for boards, and that may be why in the past that we haven't had a huge amount of people in specialist areas that we need have applied. So I think it's really important that we do set the fees, and when you go through these fees, it doesn't tell you anything about how much councils prop up the airports. I mean, we know from a fact that when you look at some of them that, some of the other airports, councils are putting in different rates of money. We don't. We haven't been getting out. I mean, we've been one of the rare airport boards that have been getting, councils that have been actually getting dividends prior to COVID. So I think we're doing pretty well out of our airport board. So I don't want to be picky over, $3,000 or $4,000 when it could be the stopper to employing really good directors. There's no one else in the queue, so I'll go back to you, Councillor Naylor.
Yeah, thank you. Just want to point out a few things. Certainly, we're not out of step with other regional airports. We have the information in our paper, and the average of other comparable regional airports brings us to 134,000. So what is being proposed is slightly more of that, more than this. The other thing, in terms of the suggestions that we should be paying well, we do need to recognise, yes, we appreciate the skill and the work of the airport board, but we're talking about 12 meetings a year. So I do think what is being proposed is more than adequate in compensating directors, and that should not be a deterrent for people applying for these positions. I think also, it is significantly. It is a significant step up from the package, the current package of 108,000, and so I do think this is reasonable, and I would urge you to support it. Thank you.
Right, now, councillors, we will go to vote. And that is carried 10 votes for and 7 against. Right, so we'll now break for morning tea. Oh, sorry, we've just got to take this, yes, the substantial, thank you. So we'll now go back to... Right, so we'll now... It's okay, we just wait for that to come through. Okay, we're all good to go, so we can vote. And that is carried unanimously. So we will now break for morning tea. So it's 11:45, so if you could be back here at 11 o'clock on the dot, that will be great. We've got a quorum, so we will resume. So we're now going to item number 8, which is the debt funding arrangements for the Palmerston North Airport, and that's again presented by Steve Patterson, the Strategy Manager of Finance. Busy morning for you, Steve. And that's on page 75.
Councillors, yes, the trifecta here for the airport in terms of the reports. As you will have seen from the report, one second, I just had some notes for myself that seem to have walked. Where did I put them? Oh, excuse me. So, as was talked about a little bit earlier, all going to plan, the airport's got a significant program of investment ahead of itself. And so it's been reviewing the options that there are for funding. And as you'll be aware, the council has access to significantly good funding lines and at a price that's better than the company can achieve on its own. So it makes economic sense for both the company and the council as the 100% shareholder to investigate options for utilising this strength. The two parties, that's the council and the company, have engaged joint advisors to help us determine the best approach going forward. And this report that I've prepared here highlights the two key ways that there are of the company gaining access to funding through the local government funding agency. One is for the company to borrow itself directly, and the second is for the council to borrow and then on lend to the company. So the recommendation that we're suggesting here is that the option that the council borrow and then on lend to the company is the most practical and desirable option, and in the short term at least, well, short to medium term, probably maybe even in the longer term, is the most cost effective as well. The final terms of any such arrangement that we're entered to are still for negotiation between the parties and would be the subject of a formal agreement between the company and the council. Council's treasury policy that we have, that's formally adopted by the council, contemplates such an arrangement and has provisions that would enable it. It's a relatively common series of arrangements that the council would enter with a CCO of its own. So there are quite a wide number of councils who do something similar. It's important to understand that if the council is to borrow in this way and then on lend to the company, that the amount that's on lent is considered to be an investment, if you like, by the council. So that means it can be offset against what's considered to be the council's debt, and so the council then has a net debt that's lower, and so that means that the borrowing and on lending doesn't impact on any caveats for borrowing that we have as the council from the local government funding agency, and it doesn't impact on the levels of capacity or headroom that the council has for borrowing in the market. One thing that I didn't mention in the report, and that was an oversight on my part, I guess, was that the IRD has some proposals for change in income tax regime, which, if they were adopted, could impact on the price, perhaps, that we were negotiating between the parties because of the way the tax is treated between the council and the company. But council's tax advisors are cautiously optimistic that that with their briefings that they've managed to have with IRD officials in recent times, that they think it's, I don't know if I could say highly, but reasonably likely, and possibly as much as highly likely, that those current proposals that are out there as part of a tax reform package will change, and that the current tax treatment of interaction between the council and the company will remain as it is at the moment. And so we'll just keep a watch on that. It's expected that there will be certainty about that particular position at least before the end of February. So, as I said, I didn't bring that to your attention in the report, but we think the risk is very low in terms of impact on the council of that, but it's just we're needing to be aware that that is a possibility. So, in summary then, from my perspective, we've been working proactively with the company to try to assess what's best. We believe that it makes sense for the council and the company to work together to get the best deal for the city in terms of how the funding that's required, given the level of funding that they expect they'll require for their development program over the next 3 years or 4 years. And this makes sense economically for all parties.
Okay, thank you, Steve. I'm expecting most of the questions will end up being directed at the airport board, which we have back online. So we have David Lennon, the Chief Executive, and we also have Jonathan Baker, the Finance Manager from the airport. So we're now taking questions. So Councillor Johnson, you're first up.
Thanks, Madam Chair. Thanks, Steve. What are the risks to ratepayers of this arrangement, and is it any different because, given that we are the only shareholder for the airport, is it any different if the airport raises the loan or council raises it and on-lends to the airport in terms of risks to Palmerston North ratepayers and the council, or is it effectively the same risk?
More or less the same risk in a sense, although the company does stand alone in its own right and is responsible for its own borrowings. But if it were wishing to borrow directly from the local government funding agency, which is the only place it would be able to go to get funding that would be worth them pursuing, then the council has to take steps that effectively mean the council, although it can't by law guarantee it, it has to put mechanisms in place that would have the same outcome, really. So one way or the other, the council's behind what's happening, and so for ratepayers it ends up being pretty much the same.
Yeah, that's the thought. Thank you.
Mr. Armstrong.
Thank you, Madam Chair. Thank you, Steve. So Councillor Johnson has sort of touched on my question in part, but effectively your proposal is to take non-recourse to the council balance sheet borrowings and effectively bring them on board. So my question is, the bank or the external funder currently charges a premium for accepting that risk. What I don't get in your paper is just what is the quantum of borrowings that would come on board for which ratepayers would be holding that risk for, and what is the value of the, if you like, premium that is being saved over the period that you're thinking this arrangement would last?
We probably should ask David to comment on that.
Well, perhaps in a moment, but
yeah.
First I'd just respond as well, saying when the company is borrowing from its current providers, it'll obviously be getting a charged margin, as you rightly say, and the margin is there's a security given by that over the property at the moment, and so the council isn't effectively standing behind any of those borrowings in a direct sense. It's only as the 100% shareholder of the company, and whatever action we would decide to take if something happened beyond that. So if we were borrowing and on lending, the security that would be given over the debt itself would be the council's debenture trust deed that it has, and the ratepayer therefore standing behind it. And so the security the council would have would be no formal security in a sense, because that will still be utilised by the institutions that are giving the short-term borrowing to the company. And so then it depends, I suppose, the mix of long and short-term funding that the company requires. It'll still require short-term funding through its banking arrangements and a longer-term one through the council, if that happened to be the way we do it. And so that will depend in the end on the scale of their development program and how much they're looking to borrow. Those sums vary quite a bit depending on what the latest position is, but you could conceive a position where it's at least $50 million worth of borrowings over the next 3 years, or perhaps even more, which the council would be borrowing directly through the LGFA and then on lending to the company in various ways. And so what we'd be looking at as part of the arrangement would be the margin that the council would charge over and above that, and our plan is, if this is accepted, that would be that we would assist between the parties. We'd have an external advisor helping us work out what would be an appropriate margin for the council to take, bearing in mind we wouldn't be looking to treat risk quite in the same way that a bank might.
Thank you, Steve. So look, I understand that, and I guess my question really is, so how much money would we be keeping as opposed to paying the bank as a result of this arrangement for that $50 million peak borrowing facility? It doesn't have to be exact, but just broadly, how much is this worth in terms of savings?
Savings to the company, really, in the end.
Or savings to the group?
Yeah. I guess it depends what assumptions you make on the things, but I think Jonathan had done some figures, which I have, he might have in his head and I don't, so.
You go for it.
Yeah, so assuming we borrow up to $50 million over the next 10 years, the calculation is that that's $6 million worth of interest saving to the group.
Okay, thank you. So then I guess my next question is the bank, as well as charging a premium for accepting that risk, also puts in place a number of constraints or checks on the company. So what do you have in mind in that regard, Steve?
Yeah, well, the extent of the borrowing would be controlled in a sense, or determined by the council agreeing to the statement of intent each year. And as part of that statement of intent process, we would obviously need to perhaps be slightly more focused on the financial position than we would currently be in terms of assessing that, wearing a slightly different hat, thinking about the nature of the borrowing and the implications for that and the company's ability to service it as part of those arrangements. So our expectation, as I said, is that it would be through that, perhaps the loan agreement, as we would drive that, would specify the way we'd go about that, but broadly the total amounts and the servicing capability would be driven by the council's acceptance of the statement of intent each year.
So the statement of intent would effectively put constraints on how the airport will operate. So then, stepping back from this, Steve, if the council has $16 million of borrowing facilities currently in place, and its peak borrowing requirement is $50 million, or the company, then does the company actually have options around securing that additional funding, or is this really, I mean, are there constraints because of ratios, funding ratios, EBITDA levels, interest turns, which are driving the company to this solution?
I can't speak directly for the company in that, but what I would comment is that in the environment that we're in, where there's a lot of uncertainty, I suppose, I would be surprised if the company were capable of borrowing through the banking regimes as much as the $50 million. But they haven't investigated that yet. But I think what would be certain is that the margins, the rate at which they could borrow would be substantially less through this sort of regime than through a banking regime for whatever reason. So I think it's unlikely. I don't know whether they'd be capable of borrowing through other mechanisms, but the banks really are the only other mechanisms other than the local government funding agency that we have for them.
Okay, so then in summary, this in many respects is around managing peak borrowing requirements and making sure that there is the funding in place to enable the development to take place. That's an equally important consideration at this point.
Yes, I would say that is equally important. It is important for the company to know that they can get the funding before they proceed with any of that development.
Okay, and the value of the interest savings for ratepayers accepting the risk that's currently through an external financier is broadly of $6 million over a 3-year period?
I think that's a 3-year period that Jonathan had done that calculation for, yes.
Okay, thank you.
Thank you. Steve, just a follow-on question. Is there any limits with the LGFA fund that with borrowing? I know it won't affect our other debt levels, but...
No, I mean, the amount that we could borrow on their behalf, are you saying?
Yeah, no, I'm saying our total borrowing with LGFA, is there any limits there?
No, well, there is, but not, but any that's on lent in the way that's proposed here would be deducted from that and not taken into account. So if it was as much as 50 million, that would be deducted from the total sum that we'd borrowed and the calculations for LGFA.
No, I'm just wondering sort of about, is there any limits that LGFA would put on us so that, say, council decided they wanted to borrow, say, another 50 million and they'd come back and say, no, you've borrowed too much?
Yeah, I think at the moment there are caveats, of course, as you're aware, through the process of us adopting the 10-year plan, where the LGFA outlined to us that if we were to borrow as much as what's proposed through the 10-year plan, that wouldn't be fundable within the caveats that we've got. And so, you know, something has to be done about that, obviously, and we're
that's a different issue.
And that's a different issue. But if, assuming that issue is resolved, then the council's ability to borrow within the limits that they have won't be at all influenced or constrained by an arrangement with the airport.
Okay.
Yeah.
Thank you. Councillor Finlay.
Thank you, Madam Chair. I've got a few questions. Steve, when you're talking about the tax, you said it's not highly likely, but likely. And then you went on and says, but it should be highly likely. What is it, highly likely or likely?
Yeah, you're right. It is tricky. Our tax advisors have made, on behalf of local government generally, have been liaising very closely and made submissions to the IRD about their proposals. And I think they have an acknowledgement, as I understand it, that's been reflected to me in writing, that not from the IRD but from our advisors, that that they're reasonably confident that that they've got the message and understood what the implications are, and that their original proposals, I think, were not, that they didn't understand the implications of what might have been might happen, and so I think they're. I guess tax advisors are never going to give you absolute optimism, but they're as confident as they can be that they've got the message through, and that that it will be resolved in late February or early March.
Okay. Chief Financial Officer will comment.
Yeah, maybe if I just add to it slightly. If the changes don't happen, and it's very unlikely, then the economic benefits of this arrangement don't stack up, and we would have to revisit it.
Yep.
Well, they might still stack up, but perhaps the cost would still be slightly higher to the airport company than what we might be looking at now. So I think it's fair to say that even if they didn't, if that happened, there would still be a case for doing what we're proposing.
So to clarify, before we went into any agreements, we'd have confirmation from IRD.
Yeah, I think we're unlikely to be far enough advanced that there wouldn't be certainty from the IRD position before we had to absolutely commit to.
Okay. Thank you, Steve.
And my next question is, now, if we're borrowing the money and we're lending the money to them, they would pay us and we would pay the bank? Now, they're not paying the dividend at the moment. Does that give you any concern at all?
As to whether or not they'd be capable of paying the interest? Well, that's part of the assessment that we have to do, and they have to have done themselves the business case analysis to be prepared to understand that they can meet those commitments. So what you heard the board say, I think earlier today, is that they're doing design concepts and things at the moment, but they're not at the point where they'd be looking to commit. And there's a robust process has to be gone through before they'll commit that capital expenditure. And the board themselves will have to be convinced that they're capable of servicing that debt before they would be committing to raise it.
If something happened and they couldn't service the debt, we'd still have to carry on paying.
Well, that would be true, yeah. One way or another, yes, there would be a problem. But even if the company did that in the present circumstances of borrowing from somebody else without the council being involved in the loop, ultimately, as the 100% shareholder, the council would have to involve itself in some way or another.
Right. And then you went on the last question, that you went on and said that if we borrow for the airport company, it won't have any effect on our debt level. Can you explain that to me? Because I think if we borrow, that's our debt level will go up.
Yes. Certainly our debt level will go up, our total debt that we've borrowed. But if you on-lend something to somebody, the amount that you on-lend is then considered to be an asset. And so you can deduct the value of the amount that's on-lend from your total borrowing to arrive at what's called net borrowing. And so the net borrowing is the amount that's relevant in terms of all of the calculations that the funders do.
Okay, thank you.
Councillor Barrett.
Thank you, Madam Chair. Just following on that, so I understand what you're saying about the on-lending and the net calculation. Who sets the rules around that, and is there a potential that things could change down the track whereby it might start to affect our ratios?
The rules about how the calculation's done are set really in stone in the LGFA itself and its constitution and its formation as to how it does that sort of stuff. So I don't see that there's any risk around them changing that formula in terms of the way in which that's done.
Thank you, Madam Chair.
Mr. Armstrong.
Thank you, Madam Chair. Look, just one more point of clarification. There's currently $1 million of headroom on the existing bank facility. How quickly does the airport, how soon is this issue of requiring additional funding going to bite? And without prejudging, but what are the other alternatives that are being investigated? I mean, is there really a choice today around this decision?
Well, I guess from my perspective, there's probably the choices are like these. I think we leave the company to its own devices to try to find ways of raising capital, and without council support, the only choice they have is to go to the banks. And I would be surprised if the banks would be prepared to lend to the levels that they would require to do the development. So as the shareholder, then we would be faced with saying, well, if they couldn't raise the funding through borrowing, would the council then be required to put more capital into the company or something similar in order to achieve the same end? So we haven't budgeted to put any more capital into the company at all, and we think that the debt equity ratios are reasonable. And if we can facilitate their borrowing and they can make the business case and convince themselves and us in the end that that stacks up and they can service the debt, then I think this is what this is trying to put in place to be able to facilitate that.
Okay, thank you, Steve.
I have no further councillors in the queue, so that's the end of questions. So thank you very much, Steve and the board. So we will go to the recommendations. And I'll just read out the recommendations for those online. So we have recommendation number 1, that approval be given to the request for Palmerston North Airport Limited for the council and PNAL to enter a formal loan agreement that would enable the council to borrow sums from the local government funding agency and on lend to Palmerston North Airport Limited in the form of fixed rate unsecured debt. 2, that it be noted that this arrangement will not impact on the council's ability to borrow from the local government funding agency for council's own requirements. 3, that the Chief Executive be delegated authority to agree the terms and conditions of the loan agreement for subsequent approval by the council as required by council's treasury policy. So I'm happy to move the 3 of those. Do I have a seconder? Thank you, Councillor Naylor. And does anybody want to speak? Mr Mayor, I'll let you go first.
Thank you, Madam Chair. Look, thanks, Steve, and others that have input into this. And look, I support the advice and ultimately the recommendation. I think it's all about the smart way of borrowing or funding the master plan of the airport. The airport company essentially is an infrastructure or transportation company. It's also a CCTO, so it can apply to this fund. And the LGFA is set up to fund council's infrastructure, transportation and their CCOs. So it fits. The risk is probably the element that has been debated out, and I think that has been well answered. It is low, but it is the best way for them to raise capital and ultimately the best deal for the city. We own the airport 100%. We're not in any multiple or JV arrangements, so the risk becomes lower. And also we own all the assets, ultimately, as the shareholder. So again, I think the risk is measured. It's on the lower end of scale. It is definitely a more efficient way, and ultimately, just being borne out by some of the questions, a much cheaper way of funding the much needed infrastructure and that the airport wished to undertake. So please support it. It's prudent practice. Thank you.
Councillor Johnson.
Yeah, I'm happy to support this. I think we want the airport to be diversifying so that there's less risk of a drop in income if there's a drop in passenger numbers for whatever reason, and we've seen a couple of reasons for that just recently. It makes sense for us to borrow the money at the lowest interest rate possible because ultimately it's our company. So we're the shareholder. So why we would subject the airport to borrowing at a higher interest rate and therefore paying more interest on a loan, we'd just be shooting ourselves in the foot. And the other issue, which I think Mr Armstrong brought out quite well, is that in the current environment where credit is quite tight, it might actually really stall the airport's plans if they're unable to raise the amount of capital that they need to do their diversification programme. And so we retain a lot of control in terms of the annual reporting and statements of intent, and we also retain control around directors. And so I don't think that this is a substantial risk. It's certainly no more or less risky than the airport borrowing the money themselves. because ultimately, if there were to be any default, it would be back on City Council anyway. So I think it just is a very sensible arrangement. It won't affect our own ability to borrow from LGFA, and so I actually think it's, it's not really a difficult decision to support it.
Mr Armstrong.
Thanks, Madam Chair. I also support the resolution, and pragmatically it seems to be the sensible thing to do at this point. I would, on reflection though, there are other opportunities to fund long-lived assets and match tenure with the life of the asset. And I think in the sense of a broader strategic plan, once the airport is through the construction phase of its development, the ability to operate at a different gearing ratio and to look at the nature of its funding and to think about its dividend policy will be quite different from where it is today. So I'd encourage the airport team to start thinking forward about what that might look like, and when it's appropriate, engage in consultation. Thank you.
Thank you. No further comments, and I'm happy just to confirm what everybody said, so we will go to vote. And that is carried unanimously. We now move on to item number 9, which is the 2021 rating valuations, and we have a PowerPoint presentation, and that is going to be presented again by Steve Patterson, our strategy manager, and we have Simon Wilcox as the senior consultant from QV. So welcome, Simon. Over to you when you're ready, gentlemen.
Thank you. Now, I'll just get my thing open at the right place.
And that's on page 81, councillors.
So in introducing we've got this a trifecta of reports about evaluations and rating things as well. And I decided to break them down into these components so that we could focus on the various bits and move through them. This first phase is really about just giving you an opportunity to hear firsthand information about the city revaluation. As you know, it's a 3-yearly process that the council's legally obliged to undertake. We've undertaken it and used QV as our contractors to do that work for us. The revaluation timetable that we have has been delayed slightly compared with previous years, due to COVID mainly and the resources available in the Valuer General's office. Property values, as we know, have been in the headlines a lot over recent times, and I guess from my perspective, we were thrilled as staff and the council at least to receive the Valuer General's sign-off on the date that he had, that we'd timetabled, that we'd expected to get him to get it signed off. And that sign-off, though, is not an automatic thing, and Auckland Council, for example, were due to be signed off at the same time as us, and theirs wasn't accepted, their revaluation as being reasonable and complete. And so they're now having to wait till March before the revaluation results are going to be issued. So it is a reflection, I think, of the confidence that the Valuer General's office has in the local staff in particular of QV, who've had very experienced in doing the revaluations, and they know the city very well. And so they got lots of ticks on all sorts of fronts going through that sign-off process by the Valuer General. So, as I said, can't take those for granted, and I was really, really happy that we in the end got ours ticked off and enabled us to be able to deliver those out to owners and ratepayers on time. Simon will make a presentation just a sec, and he's focused on the revaluation and the property market. And in terms of any potential impact on rates and the like, and the rates incidents going forward, I'll address that as part of the next report that we've got. So we'll get Simon's with the presentation, which, yes.
Thank you, Steve, Madam Chair and councillors. My presentation is a snapshot of the results of the revaluation. Historically, I've delved into the process, and given that it's a 3-yearly revaluation, so last time 2018, this is just a snapshot of how these property values have moved. And if I'll just go through, start off this, is that right? Okay. So on the first page, we've got a table of where the values have moved and between the different sectors, and I'll go through them as, this is a pretty good summary of how we've interpreted 34,000 property valuations. I guess the most important note is that the overall value of the district has gone up 60% to $32 billion, and the makeup, which is vitally important to the council, is that the land value proportion, which of course the City Council is land value rated, went up 83%. So it's a higher ratio land to capital value change. And I guess one of the other interesting facts is, by way of pie chart, it shows the dominance of the residential property types within the city. So the residential properties make up 86% of the total property numbers, and with as you see in that first table, the residential properties trumped all others in terms of how they moved in the sector. So we got a just over 75% increase in residential on average, and nearly a doubling, 95% increase on land values. And what that has done is that the makeup of the contribution that the residential makes to the overall land values is that it now makes up 75% of the overall worth of the district, meanwhile providing 86% of property numbers. And interestingly enough, every 3 years, the way the valuations have moved on the residential, that increase to 75% has moved 5% every 3 years. So it's taken it's shrunk, I guess, the proportion that the other 4 dominant sectors include to the values. So we're talking commercial, industrial, lifestyle, and all the other types of properties out there. So that's probably the most noticeable swing, and so they've probably shrunk 1% to give the residential a 5% swing in their worth. So what we do see there, this is just a line graph showing, there's a dark line in the middle of that, showing where the 2018 valuations were pitched, and you can see that the growth in the residential market has been steady, but from July last year, it really has taken off. So surprisingly, through COVID, there seems to have been even though there was perhaps uncertainty, the market has responded positively, and it came to a point that we were getting nearly 30%, over 30% annualised increase on residential properties. So with the residential, I guess it was a perfect storm. We've had prolonged low interest rates, the supply and demand. There was definitely an increased demand, outstripping the supply that was on hand. That was both on the residential and the section or vacant land properties. So the response to that is that with the fear of missing out, people are going over the top of each other to try and secure a property. So that's quite noticeable, that there was a big driver in the increase in land values, and in particular large sections which developers were seeing as an opportunity to cash in on what we were seeing with new builds being very, very keen on new builds, whether that be in a greenfield situation or infill sites. So, of course, there are differences between the suburbs, and this bar chart here just illustrates that whilst it was reasonably consistent between 60 and 80% increase in the capital values in the blue bars, the land values were significantly more, and those tended to be in the lower valued areas to start with. So you can appreciate it's more affordable in areas that would traditionally had lower land values, and we've got the largest increases. But what did remain the case was that when you looked at the average land values across those suburbs, they still kept even despite the larger increases on lower values, they still kept their sequence or order of affordability between the suburbs. We saw, whilst it wasn't as strong as the residential, there was still very, very good confidence in the business sectors, the commercial and industrial. More 20 to 40% increases on the capital values, and there was a particularly strong sales numbers through this last 3 years that gave us a lot of confidence where these values were sitting, and that came about through increased rental growth and also reduced yields, which you would expect in this environment. So typically we were looking at 4.5% to 6.5% of yields for these types of properties. And industrial properties actually outperformed the commercial side of things, and the northeast industrial area, and also a bit of sales activity in the freight hub area that influenced that result as well. I've put up a chart. It's a bit clunky, I guess, when you're trying to articulate these business changes through the different suburbs, but the same themes come through from the residential, whereby traditionally there's probably fewer numbers, and also the lower values appreciate, or their growth is significantly more than the more established areas of these commercial industrial areas. Out on the periphery of town, where we delve into the rural residential and lifestyle type markets, this has been strong as well. Tends to spill out from the residential. People start looking and saying, what can I get bang for my buck out in the country? So we got a 60% average increase on the lifestyle rural residential type properties, with a 75% increase on the land. So it was just a wee bit behind the residential. What we did notice, of course, was the rural residential overlay, which is earmarked in the zoning around the periphery of town, were being looked at closely, and we were seeing increasing opportunities for development in those areas, and they certainly impacted on how those particular properties' values reacted from 3 years ago. The rural market is very small in Palmerston North City, and traditionally those values were based on per hectare rates, and were already reflecting their location to the city boundary. So their increases were still modest, but still showed a positive element in that market as well. So by now, I guess I'm hoping everyone would have received their rating notices, and there is an opportunity for those who don't believe that we've hit the right level, bearing in mind that it is a 1st of September effective date, which of course we're now 2 or 3 months down the track from that, and the market seemingly has moved on beyond those dates still. But nevertheless, at the 1st of September, that was our take, and that's what the council will be using for assisting to distribute the rates for the next financial year. So there is an opportunity there to object. We have opened that statutory requirement. We've extended that a little bit over the Christmas period, just with lots going on, to give everyone a fair chance, and that closing period has been extended to the 29th of January, so it is over this period. And you can either write in or do this process online, so it's open to everyone. So it's a bit of a whirlwind summary of what we've achieved, but hopefully that gives you a pretty good summary of where these values have been pitched.
Yes, well, thank you. I've just comment from the council's point of view. We've got all those values, as you're aware. We've received them. We've started analysing them. We've made them publicly available on the council's website, so people can go to the property search tool and look up those on properties. And that's been available more or less since they were issued. We're getting some interest from people calling in about what the effect might be on rates and things, and we're just responding to that reasonably broadly at the moment, but we'll cover that off in the next report.
Thank you, Steve. So are we open to questions? Thank you. First up, Councillor Johnson.
Thanks, Madam Chair. Thanks, Steve and Simon. I just have a question about why there is such a disparity and increase in value in some suburbs compared to others. So, for example, Hokiwhitu 73%, Highbury 120%. Is that, when you're doing the valuation, it's not really done on an individual property basis? I sort of understand that. It's more a kind of an area basis. But does that feed into to particular suburbs being all assessed together? Or I'm just not clear. I'm sorry, it's not a very clear question. How is it that we have such variation between suburbs?
I think if I can explain it, it comes down to the start values in a lot of these areas. So those areas that you're referring to historically have had much lower values, and in this environment where the market is probably squeezing the top and the bottom and the top together, we are seeing a higher increase in percentage change. The value, the numeric amount might actually be the same, but in fact so the percentage change to get that same numeric amount is accentuated in the lower value properties. So that's why they show on that graph as being a higher percentage.
And I think, if I can just comment as well, there are a lot of larger sections in some of these areas where developers are pitching to do development now. So it's where people are buying, and that's showing through in the results of what the market's saying these things are worth, really. That's what this is reflective of.
So what I was just going to go on to say is, given that most of the sections that are for sale have got properties on, how are you differentiating between the value of the land and the value of the improvement when you're doing your valuation?
So all our valuations are market-based, and so we look at the sale of improved properties when we're assessing the capital values, and we look at land value sales to determine the land worth for particular areas. Now, you can appreciate in the established areas there aren't always a great number of sales, but by way of interpreting between where you do have more volume, but we also have to we can do reverse analysis by saying if this is what people are paying for the overall properties, we have to determine what a piece of land is worth under it. And of course, when you're increasing values $300,000 or $400,000, there's got to be a certain contribution to land to the value of improvements. But what I will say is that when the land moves significantly more than the overall values, what it can do is squeeze the value of improvements figure.
Yeah.
And this is where some people, if the value of improvements have gone down, it's a very hard concept for many ratepayers to understand, because they had a worth of their property. But the way that we value under the legislation is that we're using the two components that we have sales information on, and that is the overall values and the land values. We never have sales of the resultant of the value of improvement. So that is quite often takes a hit when the value of the land is moving faster than the capital value.
Yeah, that was actually going to be my next question, so thank you for anticipating.
Councillor Butt.
Thank you, Madam Chair, and thank you, gentlemen, for the report and presentation. I haven't received any notice yet because I don't own a property. So it's just for my own information, you said all the objections will be entertained. Is there any fee to entertain any objections or rethink about any evaluation?
The objection process is part of our whole process, so there is no charge for that service. If it graduates to going to court, there would be a fee for both the ratepayer and the council.
And what kind of evidence or documentation supports the claim on the other side? For example, if I say I don't agree with this and I think my evaluation should be on this level, what kind of...
Well, that's a good question, because you can appreciate that not all property owners are valuers. And a lot of generally a lot of the objections that come to us, they actually want their values up to reflect what work has been done on their properties. So that would be probably over 90% of the situation that we're seeing over past periods, and maintains that to be the case from what I've seen of the objections that have come in thus far, and which in our mind is quite when you're putting the land values up so significantly, we've thought there may be some sort of uncertainty or what the impact to the rates was going to do, but generally most people that are objecting are saying we want this value to go higher to reflect what work they've done.
Okay, thank you. I have heard a few people asking for lowering the valuation, not going higher. Thank you.
Councillor Dingwall.
Thank you, Madam Chair, and thank you for this report. Along similar lines to Councillor Butt, when you're looking at these market-based, sale and purchase information, as an example, with my house, I bought my house off my parents and they kept the price artificially low. So they sold it to me 2 years after they'd bought it at the price that they'd paid for it. So by not having any increase at all in that sale and purchase price over that 2 years, did I, in effect, artificially lower the price of the houses around me in my area? Is that how it works?
Certainly not. No, the volume of sales is such that we can determine the market trends without just looking at one sale. And ultimately what we would also expect is that the lawyers would fill out a sale and purchase agreement and say that it was a family transaction, and we would code it as such, and it wouldn't come into our reckoning. So we would not be using that sale, and it would be so far out of what we might be expecting in the market as well that we would be striking a line through your sale, sorry.
Okay, cool. That's helpful. Thank you.
Councillor Barrett.
Thanks, Madam Chair, and thanks, Steve. Thanks, Simon. Just interested in the appeals side of it. How many in a typical cycle? How many appeals?
It does vary. Traditionally, it used to be around 2%. that has come down close to 1% over the last decade.
Okay.
So for 34,000, we'd be expecting somewhere between 5 and 600,000, 5 or 600. Yeah.
Thanks. I know if you're in the property business, it's easy to tack on 1,000.
Yeah.
And the cost to council then, like how much is that expected to be, or has it been historically?
In terms of what it costs to consider the
As I understood from the earlier answer to Councillor,
yeah.
Once it goes to court, legal fees are incurred.
Yes. Our arrangements with QV are that we have a long-term contract that covers all of the services that they provide. So that includes an understanding about the normal level of, I suppose, objection that would be. And so that's just part of our ordinary arrangements with them. So that particular part doesn't cost anything to the council. There are a very, very small number that ever go to court. And so it has cost the council next to nothing really in terms of additional costs for court costs or QV costs on top of it.
Thank you both. Madam Chair.
Thank you, Councillor. Excuse me. Any further questions? There's no one in the queue. No, you've got off lightly. So thank you very much, Simon, for your presentation. Very much appreciated. So, councillors, we'll go to the recommendation, and that the committee recommends that it be noted that the 2021 city rating revaluation has been completed and new values with an effective date of the 1st of September 2021 have been authorised for implementation by the Valuer General through the issue of an unqualified audit opinion on 19th of November 2021. Thank you, Councillor Dennison mover and Councillor Naylor as the seconder. Did you want to comment, Councillor? Okay. So does anybody else want to comment? There's no one in the queue. Okay, so we will go to vote. And that is carried unanimously. Have we got somebody missing from before? Oh, right, okay, thank you. Right, councillors, what I am deciding to do is that we break for lunch now, because I think the rates is going to be quite a big discussion, and so we'll break for lunch now, come back at 1 o'clock, and then we'll resume our business at 1 o'clock.